it's been a steady quarter for Bajaj Auto. I'd say looking at the headline numbers, there were no negative surprises. If at all anything, it was largely an inline set of numbers. Yes, we were expecting some amount of weakness and degrowth on a year-on-year basis. But if you look at sequentially, ever since the lockdown started getting lifted in a phased manner, the motor town has clearly seen a good demand coming by, whether it's two-wheelers, passenger vehicles or tractors, of course, in a big way. But given the uptick and the pent-up demand, overall, the degrowth has been relatively better than expected in their volumes. 10% is what they had registered for the quarter gone by. On the back of that, if you look at the revenue degrowth, it's been largely in tandem and largely on a similar quantum. 7.5% degrowth seen on the top line, coming in at 7,155 crores for the quarter gone by. Profits, once again, a smidge below expectations. One cannot really call it a negative surprise here or a shocking number or a shocking figure, but a tad below expectations, I would say. 1,138 crores for Q2. EBITDA was completely flat, again, as expected. It came in at 1,266 crore rupees for Bajaj Auto. Margins bang in line with estimates. We were expecting 110 basis points expansion as far as the margin performance is concerned for Q2 for Bajaj Auto. Exactly what they delivered, 17.7% versus 16.6%. A healthy expansion seen, and like we were expecting cost optimization to sort of work well in their favor and help drive the margins. That's exactly what has happened, and that's exactly what the management has also said in the press release. They've said that it is the optimization of fixed costs which helped improve their margin profile. What more is that the exports business has done really well in the quarter gone by. It continues to do well. September, in fact, they saw their highest ever sales at 2.12 lakh units as well as far as the export segment is concerned. So given the depreciation in the rupee, that has clearly augured well for the company. Apart from that, they've talked about domestic two-wheelers registering a very strong turnaround in the first half of the quarter, essentially driven by pent-up demand. While the exact festive spike is still awaited, they said that early signs show strong indications of recovery. They've not talked much about any forward-looking statements, any forward-looking projections that they may have made for the industry or for the company. And perhaps that is something that seems to have irked the market a tad bit, because right after the numbers came, the stock went down quite sharply. It did try to recover during the second half of the session. It did, sort of turn green as well briefly. But towards the end of the day, it settled with a loss of about 0.7%, close to the lowest point of the day, if not exactly at the lowest point. But they've given good and optimistic commentary as far as the update for Q2 or till Q2 of FY21 goes. There's a strong revival demand in the LATAM and Africa markets, especially driven by sports segment, they said. Domestic CVs, which is essentially the three-wheeler space, continued to be muted, whether it's passenger mobility segment or whether it's the cargo segment. Cargo definitely is a very small portion for the company as of now, but yes, it is highly dependent on the return of adequate short distance mobility demand. So they've left it at that. No projections, no outlook, no clear guidance as far as the second half is concerned, and perhaps that's why the street did not take it too well. But overall, looking at the numbers for Bajaj Auto, I would say largely an inline set.